Very good evening, everyone. How are you all? Everyone fine? I hope everyone is doing great. Can you respond once? Is everything is fine? Audio, video, once again. Can you check it? Yes, everything is fine. Okay. The last class we completed our India's 38 and then we started India's 2, but that was not completed. Okay. India's to some portion, I will say very small portion is left. What was the last point? Last point was cost formula. So cost formula, however, that is not important for calculation point of view because they in CA final exam they will never ask FIFO and weighted average price method. But you don't know ICI. ICI is always known for unexpected question. That you should always remember this point. ICI is always known for unexpected question in exam. So for this cost formula, if I will say, so inventories are of two types: inventories which are not ordinary interchangeable, inventories which are easily interchangeable. Inventories which are not ordinary interchangeable, we apply specific identification method to find out a cost price per unit. But inventory which are ordinary interchangeable, for which if the actual cost price determinable, then we apply FIFO method, first in first out method, or weighted average price method. LIFO is not applicable in India. Yes sir, yes sir. Now if sometime what happened, we are not able to find out the actual cost price, in that case they have given two valuation technique, one for trading organization or we can say non-manufacturing organization. Then in that case they have given adjusted selling price method, or it is also known as retail price method, in that case we find out the cost price by first finding out the sale price of closing stock. So how can we find out the sale price of closing stock? We will first count the number of units on reporting date multiplied by sale price per unit. Then we'll deduct gross profit margin from that. Profit margin will be given the question, we'll deduct it, and that will be the cost price of closing stock. And for manufacturing organization, they have given one technique that is known as standard costing, that you all know because in costing CA inter you have done, but in CA, in financial reporting exam, they will never ask a question of standard costing. Okay sir, yes sir. So from these MCQ type of question can be asked, we can say in this way, yes sir. Coming to the next point, comparison of NRB and cost price. So we need to compare NRB and cost price at the end of each year on item by item basis. Means item by item basis, for each item we should find out cost price. For each item we need to find out NRB, then compare. But they have also given an option of comparison on group basis if the price of each item in that group are similar. If the circumstances require, you can also apply group basis, but we can't do comparison on classification wise. Means I will just explain with one example. Till now this type of question has not been asked in exam, but once again MCQ, any type of question can be asked. Okay sir, now try to understand. Suppose we have rice one category and we have wheat one category. Okay, now rice we have three quality A, B, C, and wheat we have P, Q, R. So normally we find out cost price or NRB of each item. So suppose this is 100, this is 120, lower will be 100. This is 80, this is 80, this is 70, lower is 70. This is 120, this is 135, lower is 120. So this become what? Item by item basis. So whenever question is silent, we should apply item by item basis. But sometimes question may say you need to do comparison on group basis. In this case, you need to find out the total of cost price NRV and the lower of total will be taken. Similarly, the total of lower of which category, and then we need to find lower of this. So this become what? Group basis. So quite possible this type of question can be asked in exam. Till now not asked, but possibility is there. Possibility is there. But we will not do on total basis. Total basis means we will not do rice plus wheat total. Then we'll find out the lower of that. That is not permissible. That is not permissible. Okay, sir. Yes, sir. Then coming to next point. Next point is what? Reversal of write down. Reversal of write down. Very important concept. Reversal write down. Just try to understand. Suppose in 1 year there is a write down. Write down means the NRV is less than what cost price. In the subsequent year, the NRV may increase because once again, already I have said that NRV is an estimation. So that require re-estimation at the end of each year. Let me take one example once again for this. Try to understand this point. And a question can be asked from this topic. Suppose this is Y0, this is Y1, this is Y2, this is Y3. Y0, Y1, Y2, Y3. And you purchase one inventory costing rupees 100. You purchase one inventory costing rupees 100. So you will do valuation at the end of each year. Let us assume that at the end of each year the inventory was unsold. At the end of each year the inventory was unsold. Why? Don't ask me that. We will compare cost price 100. NRV is equal to what? Let's say 90. So what is the carrying amount? Can I say carrying amount become 90 because we'll take lower? And how much written down? Written down is 10. This will be charged to PL as an expense. This is charged to PL as an expense. Okay, sir? Yes, sir. Then again in the second year and we'll do once again the comparison. So once again the cost price 100. NRV may become 95. Now the carrying amount is 95. So how much increase? You can see 90 now become 95. So there is an increase by 5. This is known as reversal of write down. This is known as reversal of write down. Reversal write down. So this 10, the first year the whatever 10 was the expense, that is known as write down. Write down of inventory. We call it write down of inventory to its NRV. So write down of inventory to its NRV, that is a loss that will be charged to PL as an expense. And this is known as reversal of previous write down. Then third year, once again we'll do comparison 100 and let's see it become 105. Quite possible. So now the carrying amount is 100. Once again, how much increase? 5. This is known as reversal of previous write down. Means reversal of write down will be maximum what amount? That cannot be more than 10. That cannot be more than 10. That is understood point. That is understood point. I hope you have understood. Now, can I ask one question? This reversal of previous write down will be shown as income in SOPL or will be shown as a deduction in inventory expense. Are you able to understand? You have two options. This reversal of previous write down will be shown as an income under the head other income. It will be shown as a reduction of expense under inventory expense. You have two options. Fast. Correct? So whatever is my question, it will be shown as income or reduction of expense. Reduction of expense in SOPL. What do you think? Everyone respond. Reduction of expense. Very good. Everyone is correct. It will not be shown as an income. It will be shown as a reduction of expense in SOPL. Very good. Excellent. Correct. So I hope you have understood this particular point, which is also very important from examination point of view. As CA final, if they are asking, they can ask this type of question in exam. Okay. So what they have written, NRB should be reassessed at the end of each reporting date. If NRB increases, the amount of previous write down is reversed, so that the new carrying amount of the inventory is lower of cost price and revised NRB. Cost price and revised NRB. Understood? Now, coming to recognition of expense. When to recognize inventory as an expense? So it is as simple as, can you say, once the inventory is sold, the carrying amount of inventory will be charged to PL as an expense as per matching concept. Means, can I say inventory will become expense in the year of purchase, in the year in which inventory is sold? Okay, can you give me the answer for this? Inventory will become expense in the year in which inventory is purchased, in the year in which inventory is sold. Are you able to understand my question? Once again, I am repeating the question. Inventory will be recognized as an expense in the year in which inventory has been purchased, in the year in which inventory is sold. So what question are you asking? This is a question of CA Inter and CA Foundation level. What do you think? We are at CA final. I know you are at CA final. I'm just checking you are in the class or not. Okay. I know you will be giving this answer 100% correct. Everyone will say in the year it will sold, as per which concept, matching concept, recognize the carrying amount of inventory as an expense in the year in which related revenue has been recognized. Then inventory is written down to NRB. So when the inventory is written down to NRB, can this is recognized such write down as an expense in the period in which write down occurred? Whenever we write down inventory, we recognize it as an expense in the year in which write down occur. In the year in which write down occurs. Similarly, when reversal of write down, recognized as a reduction in the amount of inventory recognized, reduction in the amount of inventory recognized as expense in the period in which reversal occurs. So any reversal of previous write down will be recognized as a reduction of inventory expense in the year in which reversal occurs. This is very important. Can be asked in multiple choice question, MCQ, multiple choice question. Disclosure you can do. The chapter is over. The chapter is over. In this chapter, nothing more than this. Let us come to some question. Fast question. So come to India's to question number 20. Question number 20. 20. Very good question. I like this question personally. Write down expected. When I say expected, it is expected. On 31st March 2001, the inventory of ABC includes spare part which it had been supplying to a number of different customers for some year. The cost of spare part was 10 million, and based on retail price, the expected selling price of the spare part is 12 million on 15 April due to market fluctuation. So what is the cost price they have given? 10 million. And what is the estimated selling price? What they have given? 12 million. Then on 15 April due to market fluctuation, expected selling price of the spare part in the stock reduced to 8 million. So it is reduced to 8 million. The estimated selling expense required to make the sales would be 0.5 million. Financial statement were authorized by Board of Directors on 28 April 2000. Means, can I say it is a question of India's to read with India's 10? Now the question is that before approval of financial statement due to market fluctuation, estimated selling price of the spare part got reduced to 8 million. Whether it is an adjusting event or non-adjusting event. Can I say if it is an adjusting event, then the estimated selling price will be 8 million. If it is non-adjusting event, then the estimated selling price will be 12 million. So what do you think? It is an adjusting or non-adjusting event? Everyone, what do you think? So due to market fluctuation of 15 April, it should be considered as an adjusting event, non-adjusting event. Very good, excellent. Everyone is saying adjusting, so of course it is an adjusting situation. Just try to understand. Some of you, if you are saying non-adjusting event, so I need to give a clarification for that. Try to understand when I say NRB, NRB is an estimated selling price. NRB is an estimated selling price, and can I say market fluctuation will be always available. That information is available to a businessman on 31st March. Suppose you are a dealer of a mobile, yeah, any electronic equipment, to whatever market fluctuation you know about a position as a businessman, to whatever market fluctuation, that information will be always available on 31st March. Therefore it relate to the condition existing on the balance sheet date, and therefore it is an adjusting event. Therefore it is an adjusting event. If you are saying non-adjusting event, so I have just given the clarification. Okay sir, so can you see, we'll take 8 million, it becomes 0.5 million, it means it becomes 7.5 million, and the cost price is 10 million, and NRB is equal to 7.5 million. Then how much written down? 2.5 will be written down. 2.5 will be written down, and that will be charged to PL as an expense. Okay sir. Then as on 31st March 2002, means next year reporting date, the actors noted that such inventory is still unsold and lying in the warehouse of the company. The actors believe that inventory is in sellable condition and active market will result in immediate sale. Since the market condition have now improved, now the market condition have improved, and estimated selling price of the inventory is 11 million, whereas the estimated selling expense are 0.5 million. It means NRB become 11 minus 0.5 means it become 10.5. Cost price 10 million. Therefore, we'll value at 10 million. It means now it result in reversal of previous write down. The reversal of previous write down will be 2.5 million, and that will be recognized as a reduction of expense. Simple. So as on 31st March 2001, the value of inventory will be 7.5 million. As on 31st March 2002, the value of inventory will be 10 million. In this case, written down will be 2.5 million. In this case, reversal of previous write down will be 2.5 million. Super easy question. But good question. How, if suppose this question come, how you are writing, that is important. You need to give the reference of Ind AS 2 as well as Ind AS 10. If you are not giving the reference, you are not getting any marks. Question at 20 then. Coming to question at 21, this question is also, I will say, now expected, and I will say super expected. If they are asking any question of Ind AS 2, they can ask this question. The following is the relevant information for entity. Full capacity is 10,000 labor hour in a year. It is full capacity. It is a full capacity is not at all relevant. We want normal capacity. So normal capacity is 7,500 labor hour in a year. So 7,500 labor hour. So capacity is given on the basis of labor hour, not on the basis of unit produced. Actual labor hour for the current period is 6,500. One thing is clear that we'll take higher, because actual production or normal production, whichever is higher, so it means your fixed overhead will be allocated on the basis of 7,500. Total fixed overhead is 1,500. So they have given 1,500 is the total fixed overhead. Total variable overhead is 2,600. Can I say variable overhead will be always allocated on the basis of actual production. So this will be always based on actual production. Total opening inventory is 2,500. Total unit produced in the year is 6,500. Total units sold in the year is 2,700. So what is the closing stock? Can I say closing stock? We can find out, even though not given the question. So we'll say 2,500. How much produced? 6,500. How much sold? 6,700. It was 2,300. Understood. The closing stock will be 2,300. The cost of inventory is assigned by using FIFO cost formula. In one of the RTP, the closing inventory was given. However, if even though not given, we can calculate it. How will the overhead cost be allocated to inventory at normal capacity and at less than normal production for the current year based on the above information? This is the question. Question is very easy. So for this, how to solve it? I have already the solution with me, so I can explain with the solution. Okay, you can see what is the number of hours required to produce each unit. The number of hours required to produce each unit. So what was the total production during the year? 6,500. What was the actual number of hours? That is 6,500. So can you say to produce each unit we want 1 hour per unit. To produce each unit we want 1 hour per unit. Understood this point? Correct. Then allocation of fixed overhead. So allocation of fixed overhead will be based on actual production or normal production. Yeah, actual hour or normal hour, whichever is higher. So you can see 1,500 was the total. 1,500 was the total fixed overhead, divided by, we have done 7,500. So 1,500 divided by 7,500, it will be 0.20 per hour. 0.20 per hour. Then we'll do allocation of variable overhead, so that is 2600 divided by actual number of hours. So 2600 divided by 6500, it will be 0.40 per hour. 0.40 per hour. So units of closing inventory is given 2300, units of closing stock already given the question, or we can calculate 2300. Now we need to allocate. So allocation of production overhead. Allocation of production overhead. The production overhead allocated to closing stock, it will be what? 2300. 2300 into 1 is what? That hours required, into 0.20, that is fixed overhead, into plus 0.40, that is variable overhead. So total allocation will be 0.60. So 2300 into 0.6, that will be 1380. So this much will be allocated to closing stock. This much will be allocated to closing stock. Now how much production overhead will be allocated to cost of goods sold? Cost of goods sold produced in the current year. The cost of goods sold produced in the current year. So how much has been sold during the current year? So can I say on FIFO basis, if we say, so out of 6500 produced during the current year, 2300 is in the closing stock. So how much is the cost of goods sold produced during the year? That will be what? 6500 minus 2300 into 0.6 will do, that is 2520. And now we can find out the abnormal loss. Any fixed overhead which has not been allocated, that will be what? Abnormal loss. So how much? You can see the total production overhead treated as abnormal loss, that is recognized as an expense, will be how much? So what was the total fixed overhead? 1500. How much has been allocated? To allocation will be 6500, which to the unit produced during the year 6500, we have allocated 0.20. So how much allocated? 6500 into 0.2, that will be 1300. Total was 1500. So 200 will be abnormal loss, that will be charged to PL as an expense. This is the total allocation has been done, and the total overhead including fixed variable overhead will be how much? 1500 plus 2600. Got this point? Expected question exam, because now recently they have given in MTP, so quite possible this question can be asked in exam. Chalega. So 21 also we have understood. Any doubt in 21? Any doubt in 21? Come to 23. 23. It is already asked in exam, but simple question. On 1st Jan 2001, entity accepted an order of 7,000 custom made corporate gift. Custom made corporate gift. On 3rd January, the entity purchased raw material to be consumed in the production process for rupees 5,50,000, including 50,000 refundable purchase tax. So the refundable purchase tax will not be added. So we will consider only 5 lakh. 5 lakh will be added to the cost price of inventory. The purchase price was funded by raising a loan of 5,55,000, including 5,000 loan raising fee. This is known as transaction cost. Transaction cost. So as per Ind AS 109, transaction cost will be deducted from the amount of loan whatever received. Correct? And that will be used to calculate effective rate of interest. So transaction cost is never capitalized to the cost price of inventory. Okay, sir? The loan is secured by the inventory. And now try to understand, whenever they have given some borrowing for inventory and the question is silent, we'll always assume inventory is not a qualifying asset. If the question is silent for inventory, we'll always assume inventory is not a qualifying asset. It means, can I say borrowing cost will not be capitalized? So for any inventory, the question is silent, means they have not given whether it is taking substantial period of time or not. That is not given. Always will assume from examination point of view that inventory is not a qualifying asset, and that borrowing cost will be always charged to PL account as an expense. It means this borrowing cost will not be added to the cost price of inventory. Okay, sir? Yes, sir. During Jan 2001, entity designed the corporate gift for the customer. Design costs include cost of external designer will be added, labor will be added. Yes, sir. So this both will be added to the cost price of inventory. 10,000 will be added. Chalega. Then during Feb 2001, entity production team developed the manufacturing technique and made further modifications necessary to bring the inventory to the conditions specified in the agreement. So this will be also capitalized, because these are the other costs incurred to bring the inventory in condition of sale. So this will be also capitalized. The following costs were incurred in the testing phase: material, net of 3,000 received from the sale of scrapped output. So it is already the net amount, so 21,000 will be capitalized because this is net of amount received from the sale of scrapped output. So 21,000 will be added. Labor will be added. Depreciation plant used to perform the modification, this will be also added. So depreciation of the plant used to perform the modification will be also added. So 21,000 plus 11,000 plus 5,000 will be added. During Feb 2001, the entity incurred the following additional costs in manufacturing customized corporate gift. The consumable stores, this is indirect material, will be added. Labor will be added. Depreciation of plant used to manufacture the customized corporate gift will be added. Everything will be added. Nothing to worry. The customized corporate gift were ready for sale on 1st March 2001. No abnormal wastage occurred in the development and manufacturing of corporate gift. Compute the cost price of inventory and also give reason for the calculation. Means only you need to give the reason why it has been added. Means the reason will be what? Either it will be what? Direct material. Means it will be raw material, it will be direct labor, or it will be production overhead. So that you need to write down this is cost of conversion or what, and you will capitalize it. Okay, sir. But how to write just it? First they have written cost of purchase 5 lakh. Then loan raising fee will not be included. Then cost of purchase, again cost of purchase means this was the consumable store. This is also cost of purchase of indirect material. Understood. Then cost of conversion they have given 65,000. Then production overhead 15,000 is the production overhead. Correct now. Then the 10,000 design cost that will be also production overhead. Then other cost was this testing cost was the other cost means 21,000 plus 11,000 plus 5,000. How much it is coming? That become other cost. Correct. Borrowing cost will not be capitalized. This is the total cost price of inventory. Only if you are not writing the reason, you will not get marks. And what I have seen, students don't know what will be the reason. They will calculate the amount, they will not write down the reason. So this was a question of how many marks? 5 marks. Now you only say whether this type of question should be asked in exam. At CA final level, I don't think this type of question should be asked in exam, but they are asking, but then also students are not able to write properly. Chalega. The loan raising fee is a transaction cost. Abhi we have not, I think you have done Ind AS 109. So loan raising fee, the transaction cost is deducted with the amount of loan received. Correct. And it will be actually used for calculation of effective rate of interest, which will be used to calculate interest expense. So loan raising fee will be part of interest expense due to effective interest method. Okay, if you are not able to understand right now about this, ignore that. When we'll do financial instrument chapter, that time automatically it will be clarified. But loan raising fee will never be capitalized to the cost price of inventory. Understood this point? Chalega. This also done. Super, but can be asked again in exam. Then coming to 26. Come to question number 26. This too I think you can do it because this is the actual production. This you do by your own. Very simple. I will not do it. 26 is a simple question. This is one new question. 31. This is also a good question but very lengthy question. I don't know whether this question will be asked or not, but a part of this question can be asked in exam. A Limited began operation in the year 2001-2002. In 2001-2002, it incurred the following expenditure on purchase of raw material for its product. Purchase price of raw material will be added. Import duty and other non-refundable purchase tax will be added. Refundable purchase tax will not be added. Freight cost for bringing the goods from the supplier to the factory storeroom for raw material will be added. Cost of unloading will be added. Packaging will be added. On 31st March 2002, A Limited received 530 volume rebate from a supplier for purchasing more than 15,000 from the supplier during the year. So this will be deducted. So volume rebate, trade discount, rebate will be deducted. Yes or no? So it will be deducted. Chalega. So your purchase price means your cost of purchase will be 30,000 minus 530. Understood? So can you say from this actually we can calculate cost of purchase? We can calculate cost of purchase. Then A Limited incur the following additional cost in the production run. Salary of the machine working in the factory. Salary of the machine worker in the factory will be added. Means this is direct labor. Salary of factory supervisor will be added. Depreciation of factory building and equipment used for the production process will be added. Consumable use in the production process will be added. Depreciation of vehicle used to transfer the goods from the storeroom for raw material. Depreciation of vehicle used to transfer the goods from the storeroom for raw material to the machine floor will be added because this is for the transportation of raw material. Factory electricity will be added. Factory rental will be added. Depreciation of entity vehicle used for factory supervisor, whether this will be added. Point number 7. Sorry, point number 8. Depreciation of entities vehicle used in the factory supervisor, whether it will be added or not added. Everyone, point number 8. Doubt will come in point number 8. Ever, whatever I am not asking from my point of view, that doubt will not come. Even though you are not able to understand the previous point, you can ask me. Means I am assuming that some point you will be able to understand by your own. So I am just giving emphasis on those points in which in exam hall you may be in doubt. Okay? Batao. Point number 8 will be added or not added. If you are saying no, you are 100% wrong. 1 second. Dekho, I know where you can do wrong. I know where you can do wrong. It will be added. Depreciation of entities vehicle used for factory supervisor. Factory means what? All will be added. This will be added. If you are saying no, it means you are becoming no emotional. Don't become emotional. Otherwise, some emotions will come. Understood? It will be added. Everything related to factory will be added. Everything related to factory will be added. Everything related to factory will be added. Okay, sir. Now, during 2001-2002, A Limited incurred falling administrative expenses. Depreciation of admin building is 500. Depreciation of maintenance of vehicle used by administrative staff is 150. Selling of administrative personnel is 3050. Now, what is given? Of the admin expense, 20% is attributable to administrating the factory. Now, the question is that what the question says that these are the administrative overhead. So out of this administrative overhead, 20% is allocated, is attributable to administrate the factory. So whether 20% will be added or 20% will not be added, this is my question. So out of this 1 to 3, whether the 20% of this total cost will be added to the cost price of inventory or will not be added. Respond. Very good. Now you have understood that anything related to administrating the factory will be added. So 20% will be added. And if you remember, in the last class, I have said one point. What was the point? That what is not included in the cost price inventory, they have given administrative overhead that do not contribute to bringing inventory to their present location. It means if there are some administrative overhead which contribute to bringing inventory to their present location, that can be added to the cost price inventory. Therefore 20% of administrating the factory will be added to the cost price of inventory. Okay, sir. In 2001-2002, A Limited incurred falling selling expense. Selling expense cannot be added, even though you are adding, it will never be added. Selling and distribution overhead will never be added to the cost price of inventory. Will never be added to the cost price of inventory. So this becomes super question. But in this question, they have asked journal entry. Oh my God, journal entry. First, how they have calculated to, you can see first they have calculated cost of purchase. Of course, you can calculate, find out the cost of purchase, whether it is matching or not. Cost of purchase. So cost of purchase will be up to this. Up to this is the cost of purchase after deducting volume rebate. Just find out whether you are getting same cost of purchase or not. Find out fast in calculator and say yes, we are getting. So this is cost of purchase. Are you getting the same amount? Yes, the same. Now cost of conversion will be of two part. One is direct labor and whatever left is fixed overhead. Whatever left. So direct labor is only one point. You can see they have given direct labor how much 5,000 salary to machine worker in the factory. Means whoever is the labor engaged in the production process, that will be direct labor. So 5,000 is only direct labor. Apart from whatever is the expense, that will become production overhead. So direct labor 5,000. Can you calculate the production overhead by your own and just check whether the production overhead same amount is coming or not? The total will become 11,440. Including what direct labor, it will be 11,440. 11,440. And the total cost price of inventory will be 42,490 plus 11,440. That becomes the total cost price of inventory. But they have asked journal entry in this case. What will be journal entry? Journal entry will be what? Inventory account debit to bank. If the payment has been done, inventory account debit to bank. But if suppose there is a depreciation, so can you say in case of depreciation, your inventory will increase and PP will decrease. So you can pass through journal entry. What journal entry? Depreciation to PP, then inventory to depreciation, or you can do directly inventory to PP. Correct now. So you can see in this way depreciation to PP and then inventory. This depreciation will not be charged to PL. So inventory to depreciation, or directly you can pass one journal entry inventory account debit to PP, inventory account debit to PP. So if there is some cash expenditure, means payment has been done in cash or bank, inventory account debit to bank. If there is a expense related to depreciation, inventory account debit to PP. And if there is some indirect material, so when you purchase the indirect material, what was the journal entry? Journal entry was inventory account debit to bank, means that was inventory of indirect material, and now that has been transferred to inventory of finished goods. So your journal entry will be inventory account debit to inventory of indirect material. The inventory of finished goods will increase and inventory of indirect material will decrease. Understood? You can see the journal entry is given that way only. Inventory account debit to cash or bank for the total cost of purchase. The inventory account debit to cash or bank for direct labor. The inventory account debit to PP, cash and bank, PP, cash and bank, cash and bank, cash and bank, PP. This is related to the payment whatever has been done in cash and the payment whatever is related to depreciation. Understood? Correct. And then one last journal entry that is about indirect material, that is consumable store. So inventory account debit to inventory of consumable stores. I don't know whether this question will be asked or not, but if this question is asked and if you have not done it before exam, trust me, you will not be able to do it. Trust me, you will not be able to do it. So can you just write down must revise question for this? Must revise question for this. Small chapters can be also dangerous. Small chapters can be also dangerous, and this question will be of 8 marks in exam. In the last exam, they have given one question from India's 20 government grant, 8 marks. Super easy question, but if you don't revise, you will not be able to write. Government grant super easy question they have given, but if you don't revise in India's 20, you will not be able to write now. That I just want to say, 8 marks is super important mark. 8 marks is a game of what, passing or not passing in the aggregate. Try to understand that fact. I'll come to intangible asset. Don't worry. Have you understood this or not? So you can see India's 2 all questions I have done. I would like to take one more question which I have given as home, but the practice question. I don't know whether you have done or not. First, let me ask you whether you have done or not. Where is that question? Question number 16. How many of you have done? Question 16. How many of you have done? And how many have not done? If you have not done, trust me, once again, you are not disciplined, you are not committed, you are not consistent, and then you are out of the game. Out of the game means, try to understand what I am saying. My words may be thoda sa hard, but fact is that only the result is 20%. That you need to understand. 80% are those students who will not pass the examination, 20% will be students who will pass the examination. You need to come in 20%. Everyone can't come in 20%. If you want to come in 20%, you need to give some extra effort. Try to understand that. If the result is reverse, 80% pass, 20% is fail, then okay, then chalega. But here the result is 20%. You need to understand that point. Those who are giving some extra effort, they will only come in 20%. Maximum. Everybody is saying done some, is those who are not saying they have not done it. Okay. But I like this question personally. Opening inventory, they have given finished goods 1,000, 25,000. Raw material, they have given 1,100, 1,100. Purchase, they have given 1,10,000. Labor, they have given 76,500. Overhead, they have given 75,000. Sales, they have given 2,80,000. This is not at all relevant for for cost price of inventory. So sales they have given, but that is not required. The units is required. Closing inventory raw material is 900, finished good 1200. The expected production for the year is 15,000 kg. So this is expected, means normal production. This is normal production. Due to fall in the market demand, the sale price of finished goods was 20 per kg. So this become NRV of finished goods. And the replacement cost for the raw material is 9.5. So they have given replacement cost. You are required to calculate a closing inventory as on that date. My question to you all, those who have done okay, those who have not done, for them, what is the cost of purchase? Here only you will do mistake. What is the cost of purchase? Means what is the cost of purchase? Means whenever we calculate cost price of finished goods, we want cost of purchase, then we add cost of conversion. What is the cost of purchase? Everyone fast. What is the cost of purchase? Everyone fast. I am asking cost of purchase. You are giving 9.55. Why you are giving 9.5? What I am asking that you answer. What is cost of purchase? Correct. So cost of purchase, if you are saying 1 lakh, that is not correct. If you are saying cost of purchase 1 lakh, that is not correct, and here only you will mistake. Cost of purchase means cost of raw material consumed. So when I say cost of purchase, so it is not cost of purchase. This is the cost of raw material consumed. Whatever raw material you have consumed. So what was the opening stock of raw material? That is 1000. That is 1100. Then how much you purchased? 10,000. Then what was not used? That is 900. You need to find out how much raw material you have consumed. That is 1100 plus 10,000 minus 900. This will come how much? Check karo. 1100 plus 10,000 minus 900. That is 10,200. Multiply by cost price per unit. Can I say cost price per unit can be either calculated by FIFO method or weighted average price method. Whenever question is silent, I will always say use first in first out method. And in this case, the opening stock, you can see opening stock was rupees 10 per unit, and the purchase was also rupees 10 per unit. So can I say under FIFO method or weighted average price method, whatever you will use, the cost price per unit will be 10. But be careful. If suppose the opening stock is coming at 9 and raw material means cost of purchase coming whatever purchase you have done during the year, that is 11, so then there can be difference. Then there can be difference by using weighted average price method or first in first out method. So for this it becomes super easy, and therefore we have multiplied by 10, and then it become 1,02,000. This was only interesting point. 1,02,000. Then direct labor will be added. Then fixed overhead. This is also interesting. So fixed overhead is what? The total fixed overhead they have given 75,000. Correct. Divided by actual production or normal production, whichever is higher. Whenever they have given normal production and they have not given actual production, so actual production will be the number of units which has been introduced in the production process. So what was the cost of raw material consumed? 10,200. So we'll assume that 1 unit will produce 1 unit of finished good. So 1 unit of raw material will produce 1 unit of finished good. That will be our normal assumption. It means our actual production is 10,200. Our normal production is 15,000. So we'll divide by 15,000. So what will be the fixed overhead per unit? 75,000 divided by 15,000 is equal to 5. 5 into 10,200 will be 51,000. And the balance fixed overhead will be abnormal loss, and that will be charged to PL account as an expense. This is the total cost of production divided by 11,200. This will become the cost price per unit, and RB is given 20. Will take lower, and therefore can I say for inventory we'll do 1,200 into 20. This is the closing stock of finished good. Now coming to raw material, because inventory is expected to be sold at loss, Means finished goods is expected to be sold at loss because NRV is less than cost price. In that case, the raw material will be valued at cost price or replacement cost, whichever lower. So cost price for raw material is what, 10, replacement cost is 9.5, and therefore we'll take lower one, and lower is 9.5. We'll do 900 into 9.5. This will be the closing stock of raw material. This will be the closing stock of raw material. Understood? Good question or not? This type of question can be asked in exam. चलेगा. With this we completed India's 2. If you have any question of India's 2, you can ask me right now. If you have any question of India's 2, you can ask me right now. I will come to India's 38. One doubt has came about India's 38. In intangible asset, question number 10 and 11, which are different, why we are doing after year 1. In intangible asset, question number 10 and 11, what are the difference and why we are doing after year 1 in question number 11. Let me go to the chapter because I don't remember the question. So you want India's 38. Let me come to India's 38, and India's 38 question number 10 11 you are saying. Okay. Oh ho ho ho. Now I have already explained 11. Any doubt in 11? Eleven already I have said, because try to understand, this is very important point. Whatever you have asked, this question you are asking because I have not done question number 10. If I would have done question number 10, the doubt would have not come. Okay. अच्छा, India's 2 तो no doubt. India's 2 also you have some doubt in question number 32, in question number 22nd part. Let me first come to India's 2 only. Let me complete it. Then I'll come to India's 38. Question number 22nd part. Question number 20. What is question number 22nd part? Already I have explained right now. What is the doubt in this? Are nalayak. थोड़ा सा you need to be smart to understand everything, because I am little fast. That too, of course, I will also accept. I am not slow. Okay. थोड़ा सा you need to be high level of concentration is required. If you are not concentrating, you will also die. I will also die. Now, first year you have understood now. Means year 1, cost price was 100. Cost price was 10 lakh. NRB was 7.5 lakh. Therefore, carrying amount is 7.5 lakh, and write down is 2.5. This you understood first year. Second year it is 10, and now it become 10.5. So carrying amount become 10. Now you can see increase how much? 2.5. This is the reversal of previous write down. This is reversal of previous write down. This is the only answer. Understood? Now, yes sir. Chalega. Means I can't explain more than this. I have already explained. Now what you are not understanding, that also you need to write down so that I can understand what is your emotions. Chalega. Then India's 2 question number 32. Come to India's 2 question number 32. India's 2 so many doubt. Oh my god. Question number 32. 32. Come to this. B Limited has valued its stock held for distribution as free item on claim by customer at 0. So B Limited has valued its stock held for distribution as free item on claim by customer. So there was some stock held for distribution as free item. At 0, customer have a right to claim the free item within 14 days from the date of invoice. Why it was 0? Because can I say the NRB will be 0. The cost price or NRB which is lower. Got this point? If the time limit of 14 days exceed, the claim is foregone by the customer. The majority of free item require online registration by the buyer for participation in the context conducted by respective brand, which need to be done by the buyer within 3 days from the date of invoice. Okay. Out of it, a few items under the category were found damaged. There were some free item which was found damaged. The replacement cost of such item would be 2,50,000. The replacement cost, the cost of replacement, determine whether entity has to book loss of inventory or provide for replacement cost of the goods that need to be given as free item to customer as per the principle of Ind AS. Correct? Understood? Now try to understand. Try to understand in this case. Got damaged. Okay, we can understood. It means they need to replace it. So this is actually, if I am saying they need to replace it, this become what? One type of what? Obligation to purchase some more goods to fulfill the need of customer. Understood? So what the answer has been given? If you see, Ind AS 2 deals with the write-off in the value of inventory. That deals with only the write-off inventory. So already the damaged goods is already written down to zero. Now how much you write down? There is nothing to write down. The stock of free item is valued at zero by the company. It is correct. The question of loss of inventory does not arise as the claim of free stock is subject to various conditions. So this will not arise. However, the provision is to be made for the goods for distribution in case claim for customer are received, since the customer can claim the free item within 14 days from date of invoice. Hence, provision of 2,50,000 required. So if the already the claim has been received, a provision is required. A provision required as per Ind AS 37. So you need to create a provision as per the requirement of Ind AS 37, not as per Ind AS 2. So as per Ind AS 2, Ind AS 2 only deals with the write of inventory, and that free item is already written down zero. Now how much you write down? You can't write down below it zero, na? Okay, sir. Question number 32 you understood? चलेगा? Then 10 number. 10 number means what? Question number 10. You are saying 10 number means question number 10. Come to question number 10. But this is a doubt. If you are adding question number 10, write down which Ind AS you are asking. Please be careful. I can't understand what you are adding. Write down properly. You are wasting my time also. This is the, I think in this no doubt will come. Why is 10 taken and not 7.5? It was revised in the previous year. What is your doubt, Ray? Try to understand. In year 1, cost price was 10, NRB was 7.5. This, any doubt? No doubt. In 7.5, because it was an adjusting event. In this, no doubt. Carrying amount becomes 7.5, and then written down, write down is 2.5. Now it is given at the end of second year. This we are doing reassessment at the end of second year. Okay. So once again, cost price is 10 only. Oh ho ho ho. You are saying this should be 7.5. Oh my god. Oh ho 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 ho. Oh my god. Oh my god. Oh my god. Arey baba. Oh ho ho. Arey nalayak, the formula is cost price NRB or carrying amount NRB. In days 2, the valuation is done at cost price NRB or carrying amount NRB. Nalayak. It is cost price NRB. Now I understood out. It is cost price. We compare cost price with NRB. We don't compare carrying amount with NRB. We compare cost price with NRB. This is not Ind AS 16. This is not Ind AS 16. This is Ind AS 2. We value by comparing cost price and NRB. The cost price is 10. NRB is 10.5. The lower is 10. And now you can see increase in carrying amount. Year end increase, year end 1 was 7.5, year end 2 it was 10. So this is a reversal of previous written down. Understood? Oh my God. Please write down your doubt properly. You are asking about this cost price. How can I understand your doubt in this message if you are writing in this way? Try to understand my emotions also. Okay. I'm a mentor. I am not God that I will understand everything whatever you are thinking right now. Okay. Now come to this 38 also. Come to 38. 38. Now, question number 11, I think we have done in the class, and I said in year end 1, because a new revised estimation has been given, and therefore we'll calculate based on this. Any doubt in this? Question number 11, because new revised estimation of production has been given at year end 1, therefore we'll take that revised estimation for the calculation of amortization. In this any doubt? If in this any doubt, then I need to first explain this. Bol. No doubt. The doubt will come in question number 10. May come is if you have not understood question number 11, doubt will come in question number 10. Once again. X Limited engaged in the business of manufacturing fertilizer and they purchased technical know-how and the amount paid was 10 crore. You can see they have estimated the production in year 1. This is at Y0. At Y0, it was this. Now, at the end of first year, it achieved the target production. So, at the end of first year, they achieved the target production. And at the end of second year, it means just try to understand in this question at the end of year 1, revised estimation has not been given. If at the end of year 1, revised estimation has not been given, so what assumption will take? The same estimation will prevail. It means we'll assume that whatever estimation has been done at y0 that remain same at y1. That is only our assumption now. If at y1 new estimation has not been given, so what will be our assumption? That whatever you estimated at y0, same will remain at y1. Got this? Fine. Then at the end of second year, the actual production is 65,000. Now at the end of second year, actual production is how much? 65,000. And now they have given new revision of how much? 85, 1 lakh 5 and 115. It is 85,000, 1 lakh 5,000 and 1 lakh 15,000. Understood? This is the question. It means for year 1 you will take this, or you can say we will take this now. But actually we are not taking the estimation at y0, we are taking the estimation at y1 only. Y1 is equal to y0 because the revised estimation at y1 is not given. Got this point? But I will say we are taking this only now. We need to take this, means what will do? Year 1 amortization will be how much? It will be 10 crore. It will be 10 crore multiplied by 50,000 divided by all this. It will be 50 plus 70 plus 100 plus 120 plus 110 means 4,50,000. This will be the depreciation amortization. Can you give me what is the amortization? I think it will be 1 crore 11 lakh 11,111. I think this is the answer because I have done this question many times. Understood? Now in year 2 there is a revision. So whenever there is a revision, we need to first calculate a revised carrying amount. So what is the revised carrying amount? Means what is the carrying amount? It is 10 crore minus 1 crore 11 lakh 11,111 is equal to how much? It is how much it is coming? 8 crore 88 lakh 88,889. Now for second year, your actual production is 65,000 divided by total revised estimation, means it will be 65 plus 85 plus 105 plus 115 is equal to how much? That is equal to 3,70,000. 3,70,000. Now your doubt is over. Whoever is asking this question, thanks to him or her, because this was very good point. Till now not asked in exam, but in MCQ this type of question can be asked. Have you understood? And also say thanks to me also. It's a maja aa raha hai. Now India has 38 completed, India has 2 completed. Now can we proceed? Can we proceed? Yes, sir. India has 2 completed. Yes, sir. Now we'll come to India's 40. Now India's 40 is very simple. I will not take much time in this if you don't trouble me much. Okay. The investment property means what? One thing is clear that property, plant and equipment include property other than investment property. Correct? The property, plant and equipment include property other than investment property. The investment property is property. Now what do you mean by property? It is a property is land or building or part of building or any land and building. This is property. Apart from this, there is nothing known as property. Okay, sir. So investment property is property held by owner. Either it is held by legal owner or held by lessee as a ROU asset. So it can be also held by lessee as a ROU asset. ROU asset. ROU means right of use asset. So investment property is a property either held by owner or held by lessee as a ROU asset for earning rental income, for capital appreciation, or for both. For earning rental income or for capital appreciation or for both means it is given rent to earn rental income, or it is not given rent but it is held idle to generate some capital appreciation in future, or it can be for both purpose. It can be for both purpose. Now for clarification, means there are a lot of clarification for this. Let me clarify what are the points which you should know. Chalega. You can see when I say any property which are held for sale in the ordinary course of business, then it become inventory. Any property which are held for sale in the ordinary course of business, then it is your inventory. For example, you are a real estate dealer and you do construction of building and then you sell it in your ordinary course of business, then that property is your inventory. Now held for production, supply or admin purpose or rental to other, then it is property, plant and equipment. So if any property is held for production or for supply or for rental to other or for admin purpose, then it is property, plant and equipment, and India 16 will be applicable. But any property which is held for earning rental income or for capital appreciation, that is investment property, and India's 40 will be applicable. India's 40 will be applicable. Please try to understand one point of confusion is that under the definition of PP, why it is given rental to other? Why it is given rental to other? Just try to understand the word rental to other and for earning rental income, these are two different points. When I say earning rental income, means it is given on market rent. Means whenever it is your business to earn rental income, you will give your building on market price. But sometimes what happens, we give on rent to our employee, we give any property on rent to employee at concessional rent or at free price. Then in that case, whatever property you have given to your employee, that is also given on rent but not for earning rental income, and therefore it will cover a definition of PP. Means any property given to employee at concessional rent are not for earning rental income and therefore are classified as PP. Therefore are classified as PP. Understood? Correct? Yes, sir. Chalega. These are known as employee occupied property. So any employee occupied property or any owner occupied property, any employee occupied property or any owner occupied property will be property, plant, equipment, and India 16 will be applicable. India 16 will be applicable. Coming to one more clarification about plant and equipment. If plant and equipment is held for sale in the ordinary course of business, inventory. If plant and equipment are held for production or supply or for rental to other or for admin purpose, PP. Now, if any property, any plant and equipment, any plant equipment are held for earning rental income, means if you have some car, if you have any plant which is given rent for earning rental income, then also it will be treated as PP only. Means there is no specific standard for this particular point. So only for property we have investment property, India's 40. For plant and equipment, even though it is held for earning rental income, India 16 will be applicable. India 16 will be applicable. Chalega. Then I have said ROU asset held by lessee. ROU asset held by lessee. Correct. It means any ROU asset held by lessee can be property, can be plant and equipment. Any ROU asset held by lessee, you know, Ind AS 116. I think thoda you know about lessee and lessor. You know about lessee and lessor. So ROU asset can be property, can be plant and equipment. Now, if that property is held for production, supply, or admin purpose, then that is classified as PP. Understood? If that property held by lessee as ROU asset is held for production or supply or for admin purpose, then it will be classified as PP. But if it is held for earning rental income, means that property is given on operating lease. That property is given operating lease. Are you able to understand? Held for earning rental income means sublease as operating lease, then it will be classified as IP. Then it will be classified as IP. IP means investment property. So any ROU asset held by lessee, if it is only given on rental for earning rental income, then it will be IP. If it is used for production, supply, or admin purpose, then it is property, plant, and equipment only. Similarly, plant and equipment will be always, any ROU asset which is plant and equipment will be always classified as property, plant, equipment. Will be always classified as property, plant, and equipment. Got this point? Correct. However, just try to understand ROU asset, even though it can be classified as PP, or even though it can be classified as IP, their recognition and measurement will be done as per Ind AS 116. Means recognition and measurement will be covered under Ind AS 116. Classification right now we are doing as per Ind AS 16 or Ind AS 40. Are you able to follow me? This point is clear? This point is clear? Yes, sir. If a machine is given for rent, then Ind AS 16 shall apply. Yes, means that machine will be classified as property, plant, equipment. Okay, sir. Have you understood this point? Then one more clarification. If any property is held by owner, if any property is held by owner, correct, and it is leased, property is held by owner and it is leased. So either that lease can be operating lease or finance lease. Can you see, if it is finance lease, then that property will be de-recognized because the control has been transferred. So can you see, if the property is given on finance lease, the question of classification will not arise because property will be automatically de-recognized from the financial statement of that entity. But if it is given on operating lease, it means it is held for earning rental income, and that property will be classified as investment property and will be covered under Ind AS 40. Ind AS 40. Once again, lease transaction, the accounting treatment of lease transaction is covered under Ind AS 116. I'm not discussing about accounting treatment of lease transaction. I'm just discussing about the classification of property. So this property held by owner given on operating lease, that means it is held for earning rental income, will be classified as IP, that is Ind AS 40 will be applicable. Okay. Similarly, if I say property held by lessee as ROU asset, any property held by lessee as ROU asset, can I say it can be subleased? If it is subleased on finance lease, that property will be de-recognized. The question of classification will not arise. The question of classification will not arise. But if such property is subleased on operating lease, means held for earning rental income, once again held for earning rental income, it will be classified as IP and Ind AS 40 will be applicable. Means Ind AS 40 will be covered and it will be actually classified as IP. But once again, ROU asset is measured as per the requirement of Ind AS 116. Measurement will be covered under Ind AS 116. Okay, sir. Any doubt in this? This was only definition. So from MCQ point of view, this whatever I have discussed, that is relevant. From MCQ question point of view, any doubt in this? Everyone, trust me. Whatever I am teaching, I teach in my regular batch, but it is very fast. It is 4 hours of fast. Trust me, this is not a marathon batch. This is not a crash batch. Everything I am covering, I am trying to cover all the concepts. So, if you are coming, joining me, you like the videos. Like is must, because your one like will bring happiness in our life. Understood? That happiness we are doing for the happiness. This everything is for you. I am here for you. And those who are disciplined, I always say disciplined students should become CA. Any deserving students should be CA. Means I always feel unhappy when I see that any deserving student are not able to become CA. If you are deserving, you have a right to become CA. You have a right to become CA. You have a right to come to our fraternity. If you are not deserving, you know whether you are deserving or not deserving. If you think that you are not studying, you are not deserving. If you think you are studying, correct, you are deserving. Understood? Chalega? Yes, sir. Now let us come to the next point. So this now you can solve every point. These examples are very very important for MCQs. Now of course you can give any answer. Let us read. Land for capital appreciation, Ind AS 40 will be applicable. Land for sale in ordinary course of business, Ind AS 2 will be applicable. Land held for currently undetermined future use. Whenever we don't know for what use it, what purpose it will be used in future, then it is deemed that it is held for capital appreciation and Ind AS 40 will be applicable. Agriculture land, because agriculture land will be Ind AS 16 now. Agriculture land will be Ind AS 16. Building owned and leased out under operating lease, Ind AS 40, because that is held for earning rental income, because operating lease means earning rental income. Finance lease means it is not for earning rental income. Building owned and leased out under finance lease, can I say it is not an asset now because it will be de-recognized? It is not an asset because it will be de-recognized. Property held as a ROU asset and leased out under operating lease, once again Ind AS 40. Investment property. Property held as ROU asset and leased out under finance lease, not an asset because will be de-recognized, will be de-recognized. A building that is vacant but is held to be leased out under one or more operating lease. Right now it is vacant, but in future it will be given on operating lease, Ind AS 40. Property which is being constructed for future use as IP, means it is under construction but in future it will be used for investment property, it is Ind AS 40. Building held for sale in ordinary course of business, Ind AS 2. Any owner occupied property or employee occupied property, all will be Ind AS 16. Property constructed on behalf of third party, means if I am constructing any building on behalf of you, so I am a contractor, Ind AS 115 will be applicable in my book. So Ind AS 115 will be applicable coming soon. Property occupied by employee at concessional rent, already I have said Ind AS 16. IP, any IP, I said investment property classified as held for sale. When I say PP, investment property, intangible asset classified as held for sale, that is never in ordinary course of business. Means initially it was PP, initially it was IP, initially it was intangible asset, now classified as held for sale. Once it become held for sale, Ind AS 105 will be attracted. Ind AS 105 will be attracted. Got. From this also MCQ type of question can be asked. Very very important. This example is super important. Chalega. Now there are some special case. First is dual use property. Dual use property means a property is used for more than two purpose. More than two purpose. Correct? Two or more than two purpose we can say. Means suppose you have a building. This is first floor. This is second floor. So first we need to find out whether this portion are separable. If this portion are separable, then both will be in both floor, different Ind AS will be applied as per their use. Means let us say it is used for your own business purpose, means for production purpose, and is given on rent to other and is separable. If first floor and second floor are separable, then can I say for first floor Ind AS 40 will be applicable, for second floor Ind AS 16 will be applicable. Understood? So how will understand it is separable? Separable means what? It is capable of being sold or capable of being given on finance lease. Just try to understand. Right now we have not sold it. Right now we have not given on finance lease. It is capable of being sold. Means if this portion is capable of being sold separately, capable of being given on finance lease separately, it is separable. So once it is separable, we'll apply different Ind AS. So what they are saying, each portion or part can be sold separately or can be leased out under finance lease separately. Yes, then two parts are accounted for separately as per the respective Ind AS. But no, they are not separable. They are not separable means what they want to say, try to understand. Already I have taken example. Suppose this is one floor and you can see 10% and 90%. This is only ground floor and 10% is owner occupied property and 90% is given on operating lease. Quite possible. Agriculture land is not under Ind AS 41. Ind AS 41 is only for biological asset. Agriculture land is not a biological asset. Land which is used for production and agriculture land is used for production. Therefore, agriculture land will be under Ind AS 16. Ind AS 41 is only for biological asset. Okay, I was expecting this doubt. This doubt came. I am happy that you are listening whatever I am saying. Doubt will come. These are the common doubt. Even I am a student now, I will be also confused. Agriculture land. Ind AS 41 is only for biological asset, not for land. Okay, sir? Yes, sir. Now, can you say in this case, These are not separable. If it is separable, then the respective Ind AS will be applicable. But if it is not separable, means this portion cannot be sold separately, this portion cannot be given on financially separately, then what Ind AS 40 say that if the owner occupied portion is insignificant, if owner occupied portion is insignificant, then it will be the entire asset, entire property will be classified as investment property. Chalega. So if the owner occupied portion is insignificant, then entire property will be classified as investment property. Second example. Now you can see 60% is now owner occupied property, 40% is operating lease. So can you say in this case owner occupied portion is not insignificant and therefore entire property will be classified as property plant equipment. Ind AS 16 will be applicable. Chalega? Yes sir. But now doubt will come for example number this example fourth example. Suppose 40% is owner occupied portion and 60% is given on operating lease. My question to you are 40% is insignificant or not insignificant? 40% is significant or not insignificant? If you are saying it, sorry, 40% is insignificant or not insignificant? If you are saying insignificant, I will say 40% is the passing marks. It cannot be insignificant. It is not insignificant. Try to understand. Ind AS 40 has not used the term significant. They have said if owner occupied portion is insignificant, means if it is not insignificant, entire asset will be classified as property, plant, equipment. So of course, can you see this is not insignificant and this entire asset will be classified as property, plant and equipment. Got this point? Now doubt will come for example number 5, 25%. Now you say that 25% is insignificant or not insignificant. It is a matter of judgment. Means we need to understand what are the facts and circumstances of this case and then classification will done. This type of question they will never ask in exam. If suppose they ask, I will say give your both opinion. If 25% is insignificant, then so it will be investment property. But if it is not insignificant, then it will be property, plant, equipment. But this type of question they will never ask in exam. They can ask this, they can ask this, they can ask this. Chalega? Understood? Yes, sir. So what they have given? If portion held as owner occupied property is insignificant, account under investment property. Portion held as OP, OP means owner occupied property is not insignificant, account for as PP. Chalega. Then ancillary services. Sometimes whatever property given rent is with significant ancillary services. So what Ind AS 40 says that any property which is given rent with significant ancillary services, then it will be classified as property, plant, equipment. As example, we can say hotel accommodation. Can you say in case of hotel accommodation, rent is the room is given rent with significant services, whatever you will demand, they will give you. In that case, it is actually a business, and therefore that hotel accommodation will be classified as PP, not as investment property. Understood? So any property held for rent in which ancillary services are provided and ancillary services are not insignificant, apply Ind AS 16. But if this is insignificant, insignificant means normally what happens, property is given rent with security services, maintenance services, and that is day-to-day services. These are insignificant services. Then in that case, that will be classified as investment property, and Ind AS 40 will be applicable. Chalega. Then property leased to group entity. Property leased to group entity. You try to understand. One question was asked in exam, and before that actually there was no question in ICS study material regarding this. I used to take one example in class and similar example was asked in exam. Correct? So some question, some concept can be important even though there is no question in ICS study material. Are you able to understand? So any property which is leased out to group entity means parent has given on lease to subsidiary or vice versa. Or vice versa. In that case, what will be the case? So in that case, we need to understand what will be the accounting treatment in the individual or separate financial statement and what will be the accounting treatment in the consolidated financial statement. But before that, one clarification, suppose this is parent company, this is subsidiary company. So parent company prepares separate financial statement which is their own financial statement, and the own financial statement of subsidiary company is known as individual financial statement. So this is known as separate, this is known as individual financial statement, correct? And the consolidated financial statement is prepared by parent company. Means parent company prepare two financial statement. One is separate financial statement, one is consolidated financial statement. And subsidiary company will prepare only one financial statement, that is known as individual financial statement. Understood? Correct. Now let me take one example for this. But let me take one example for this. You can see already I have taken one example. Property leased to group entity. For example, this is parent company, this is subsidiary company, this is owned property and given on operating lease to subsidiary company. Can you say once it is given on operating lease, this company become lessee, and for lessee it will become ROE asset. For lessee it become ROE asset. And let us say this was held for admin purpose. This was held for admin purpose. Understood? Now, ROE asset will measured as per the requirement of India's 116. Right now, we are not discussing about measurement. We are discussing about classification of property, whether it is property, plant, equipment, or investment property. That is only our discussion matter. Understood? Yes, sir. So can I say in case of IFS, when I say IFS, the IFS of subsidiary company, because it is given on what? It is used for admin purpose, it will be classified as PP. So ROE asset will be classified as PP. In case of parent company, because it is given on operating lease means for rental income, therefore the owned property will be classified as what? Investment property in the separate financial statement of parent company. But in consolidated financial statement, can you see this property is within group and it is used for admin purpose, and therefore in the consolidated financial statement of parent company, this owned property will be classified as what? Property, plant, equipment, because ultimately it is used for admin purpose. Ultimately it is used for admin purpose. Understood? Have you understood this point? Similarly, one better example. Parent company, subsidiary 1, subsidiary 2, owned property given on finance lease, it become ROE asset of S1. Given on operating lease, again this become ROE asset of S2, and this is used for protection purpose. This is used for protection purpose. Understood the diagram? Diagram, have you understood? Now, in the IFS of S2, this ROE asset, because used for protection purpose, will be property, plant, equipment. In case of IFS of S1, this ROE asset given on operating lease means held for earning rental income, it will be classified as investment property. It will be classified as investment property. In the separate financial statement of parent company, this owned property is given on finance, is de-recognized. It is de-recognized. Therefore, the question of classification will not arise. But can you say in consolidated financial statement of parent company, you only say in CFS of parent company, it will be IP or it will be PP. Either or it will not come. In the CFS of parent company, whether it will come, it will not come. It will come. If it will come, it is PP or investment property. Just answer me right now. Very good. PP means you understood. Now this type of question you can do it. I think understood. My job done. Can we move? Yes, sir. We can move. We can move. Yes, sir. Next point. Recognition and measurement. I will not take much time because it is same to same whatever we have done under India 16. Recognition criteria. An owned investment property will be recognized only two conditions are satisfied. It is probable that future economic benefit will flow to the entity and cost can be measured reliably. I think no discussion required. An investment property held by lessee as ROS will be recognized as per the principle of India's 116. Go to India's 116. Chalega. Measurement and initial recognition, separate acquisition. Can I say it will be recognized at purchase price plus all the directly attributable expenses to bring the asset in is usable condition. So all the transaction costs will be added. So it will be initially recognized at cost, and the cost of purchase investment property comprise of purchase price and any directly attributable expenses, for example professional fee, property transfer tax and any other transaction cost. Once again, purchase price will be invoice price minus trade discount plus non-refundable duties and taxes. What is excluded, you can read this same to same whatever we have done under India 16. Nothing to discuss much. Acquired deferred credit. Once again, deferred settlement terms means if the payment is deferred beyond normal credit date, in that case cost price will be equal to purchase price and normal credit term or at present value of all future payment. Interest will be difference between future payment and present value, and interest will be recognized as an expense over the period of credit unless it is covered under Ind AS 23. Same thing is given under Ind AS 16. Investment property held by lessee as a ROU asset. This investment property held by lessee as a ROU asset, then it is recognized as per the requirement of Ind AS 116. Then recognition and measurement will be done as per Ind AS 116. Ind AS 40 will not be applicable for recognition and measurement. IP acquired through action, once again same thing. If it has commercial substance, cost price of investment property acquired will be equal to fair value of asset given up plus minus cash adjustment, fair value of asset received, or carrying amount of asset given up plus minus cash adjustment. However, if it lacks commercial substance, then the cost price will be equal to carrying amount of asset given up plus minus cash adjustment. Super easy. Subsequent recognition, so it will be a cost model or revaluation model. Batao, you only say. Investment properties, subsequent recognition will be done at cost model or revaluation model. Subsequent recognition will be done at cost model, revaluation model. When I'm asking question, you are not supposed to read whatever is given. If you're reading, so one slap from my side, don't read. When I'm asking question, don't read it. Respond fast. It is under cost model, revaluation model, under cost model. Oh, ho, ho, ho. Very good, very good. Like you have read or you have not read? Means you have seen and given the answer without seeing you have given. Means let me ask you question. Let me ask you question. So can you say we have done inventory, then property, plant and equipment, then intangible asset, then investment property, initial recognition. As a first, this is as per Ind AS 2, as per Ind AS 16, as per Ind AS 38, as per Ind AS 40. Now initial recognition. So my question to you all, inventory, initial recognition at what? Everyone say. Everyone say. Initial recognition is done at what? Very good. Initial recognition at cost price, cost price, cost price, cost price. Now subsequent recognition at what? Is this is cost price or NRV, whichever is lower. This is cost model or revaluation model. For intangible asset, cost model or revaluation model or both? For intangible asset, cost model or revaluation model, only cost model. Fast, fast, fast. Very good. Means you remember whatever we discussed, cost model, revaluation model, but for this only cost model. There is no revaluation model, only cost model. So it means, can you see this cost model is as per Ind AS 16. This revaluation model is as per Ind AS 16. This cost model is as per Ind AS 38. This revaluation model is as per Ind AS 38. But what Ind AS 40 says that this cost model we need to measure at cost model, but using the principle of Ind AS 16. But using the principle of Ind AS 16, so Ind AS 40 says that investment property will be subsequently measured by using cost model as per the principle given under Ind AS 16. As per the principle given under Ind AS 16. Now coming to depreciation. Depreciation. Whether this inventory will depreciate, no. This will be depreciated. This will be amortized. My question to you all, whether investment property will be depreciated. Whether investment property will be depreciated. Everyone fast. Whether investment property will be depreciated. One question you are now in my hand. I was expecting someone will say wrong answer, someone will say wrong answer, and wrong answer came. Investment property, most of the students say not depreciate. Why they? I said under six, India 16. India 16 means what? Cost price less accumulated depreciation less accumulated impairment loss. Correct now. And land and building. I say building is what? Depreciable. Land is not depreciable. So of course it is depreciated. As per the requirement of India 16, land is not depreciated, but building will be depreciated. Now, why you say it is not depreciated? I have never understood. I have never understood. Cost model as per India 16. India 16 says what? Cost price less accumulated depreciation less accumulated impairment loss. Oh my God. Understood? Have you understood? Yes, sir. Now, impairment loss. Impairment loss. So guys, this is not again tested for impairment because when I say cost price or NRV which is lower, it is already impaired. But this will be tested for impairment. This is tested for impairment because this is as per India's 36. This is as per India's 36. My question to you are whether it will be tested for impairment. Investment property, whether it will be tested for impairment. Bolo. Yes, very good because already I said less accumulated impairment loss. Yes, and as per India's 36 only. As per India's 36 only. Chalega. Done. My job done. I think everything you have understood now. Lot of clarification came or not with this. This you just write down somewhere. And this is point of confusion. Lot of confusion in this only. Chalega. Can we move? Yes, sir. We can move. Yes, sir. So, can you say entities shall adopt is accounting policy under cost model for all investment property. But if investment property is classified as held for sale, then India's 105 will be applicable. Any investment property which is held by lessee as ROS, subsequent recognition is also done as per India's 116. As per India's 116. In accordance, and for balance investment property, will do subsequent recognition as with the requirement of India 16 under cost model. Under cost model. That only I have explained right now. Correct. Only India's 40 say that fair value required to be measured for each investment property for disclosure purpose. So entity are required to measure fair value of investment property for the purpose of disclosure, even though they are not required, to follow revaluation model. Means even though they are required to follow cost model. Understood? Yes, sir. Then subsequent cost, I think nothing to explain. Day-to-day servicing cost will be charged to PL account as an expense. Any replacement cost, apply recognition criteria. If satisfied, then it will be capitalized. So carrying amount of the investment property plus cost of replacement minus carrying amount of the part replaced. Minus carrying amount of the part replaced, as we have done under India 16. Not satisfied, it will be charged to PL as an expense. I think in this no discussion required. Chalega, can we move? This is very important. Transfer, reclassification. So what India's 40 says that any investment property may be reclassified to owner occupied property or inventory in future. Similarly, any owner occupied property may be reclassified to investment property, or any inventory may be reclassified to investment property. Then in that case we'll call it reclassification. Right, when the reclassification is not changes in accounting policy. Reclassification is not changes in accounting policy. Whenever the purpose of use will change, we need to perform reclassification. And reclassification is always done at carrying amount of that property. Correct? It means what can be the reclassification? Transfer of investment property to owner occupied property, transfer of investment property to inventory, transfer of owner occupied property to investment property, and transfer of inventory to investment property. Chalega? Yes, sir. And reclassification will be done at carrying amount. Means in this case, the journal entry will be what? Property, plant and equipment will increase and investment property will decrease at the carrying amount of investment property. Yes or no? So in this case, if you are saying this will be journal entry and you can do the journal entry for the other. So transfer from one category to another category will be recognized at carrying amount of the asset transferred. And then change in classification property is not change from one category to another category. Is not a change in accounting policy. It is not a change in accounting policy. Then one more clarification has been given. Mere management intention for the use of property do not evidence the change in use. Means whenever there is change in use, then only we'll do reclassification. Only management intention to change the use, but actually they have not changed the use, then it will not be reclassification. So change in use of property should be actual, not it is based on intention. Okay, sir. In this, there is one very good question. Let me take that question because that is very, very important from exam point of view. What was the question? This is the question. You can see, have been asked in exam, can be again repeated. X Limited owned a land property whose future use was not determined as on 31st March 2001. Means as on 31st March 2001, it is investment property. How should the property be classified in the books as on 31st March 2001? So this is the answer. During June 2001, next year, X Limited commenced construction for the office building on it for its own use on non-occupied property. Presuming that construction of office building will still be in progress as 31st March 2002. But can you say now the purpose change? How should the land property be classified by X Limited in the financial statement as on 31st March 2002? It will be reclassified from investment property to property, plant and equipment. Chalega. Will there be any change in carrying amount of the property resulting from any change in the use of investment property? No, there is no change. Whether the change in classification to or from investment property is change in accounting policy to be accounted for in accordance with Ind AS 8? No, no. Would your answer to A above be different if there were to be a management intention to commence construction of office building? Then there is no reclassification. There is no reclassification and it will be continued to be classified as investment property. Super easy. 5 marks question, I will say gift to the student. But if you know the content, then only you can write now. If you are not doing revision, how can you write down? Chalega. Done. This also done. Next point. De-recognition, nothing to explain. An investment property recognized on disposal or when there is no future economic benefit expected from the investment property. Okay. Gain or loss will be transferred to profit and loss account. Disclosure you can read by own. Correct? Understood? Now, in this case, disclosure में थोड़ा सा I'll just give a highlight. We disclose the accounting policy for the measurement of investment property, that is nothing but cost model. The criteria to distinguish investment property from OP or from the property held as investment, inventory means why it has been classified as investment property. That criteria need to be given. Fair value of investment property. The fair value of investment property. Fair value of an investment property is not reliably measurable on a continuous basis. The entity shall make a disclosure for the same as well. Means we disclose the fair value, but if it cannot be measured reliably, then we should disclose the fact. One point is given, but I don't think so. This is important from examination point of view. This you can read. Then extent to which fair value of investment property is based on a valuation by an independent valuer who hold a professional qualification. Means whenever we measure fair value should be measured by an independent qualified person. If there has been no such valuation, the facts should be disclosed. If it is valued by some related party or any other person who is not qualified, then facts should be disclosed. Description of valuation technique and the key input to valuation of investment property means what method has been used and what assumption has been taken for the measurement of fair value that need to be given. Fair value is measured as per Ind AS 113. So actually the valuation technique is given under Ind AS 113. What are the assumption taken that is given under Ind AS 113? Whatever assumption taken, whatever method used, that need to be disclosed. For example, discounted cash flow method has been used, and what are the unobservable input means what are the assumption taken that need to be disclosed. Then amount recognized in PL for the rental income for direct operating expense arising from investment property should be disclosed in SOPL. For example, this is the way we disclose it. Correct. Understood. Entity is required to disclose the depreciation method used, the useful life or depreciation rate used, the gross book value and the accumulated depreciation at the beginning and at the end of the period, a reconciliation of carrying amount of investment property at the beginning and end of the period. The same thing we do under PP, etc. also. Done. The chapter is over. Let me come to some questions. In days 40, there are 3 questions. Let us discuss question number 10. 12 already we have done. Question 10. This question, I think already asked in MCQs in one of the exam. I forgot. Yes, sir. Already asked in MCQs. What they have given? X Limited is engaged in the construction industry and prepares financial statement up to 31st March each year. On 1st April 2013, X Limited purchased a large property consisting of land for 2 crore and immediately began to lease the property to Y Limited on an operating lease. Means the land will be classified as investment property because it is given on operating lease. Chalega. So it is given on what? Operating lease. So it is an investment property. Ind AS 40 will be applicable. Annual rental were 20 lakh on 31st March 2017, means after many years. The fair value of property was 2 crore 60 lakh. Can I say bakwas? Because we don't measure investment property under revaluation model. Under terms of lease, Y Limited was able to cancel the lease by giving 6-month notice in writing to X Limited. Okay, you give notice, I will cancel. Y Limited gave the notice on 31st March 2017 and vacated the property on 30th September 2016. Means in the year 17-18, 6 months it was given rent and 6 months it was not on rent. So for 6 months, can you say the annual rental was 20 lakh? So 10 lakh will be the rental income. Rental income you recognize as an income? Yes, sir. On 30th September 2017, the fair value of property was 2 crore 90 lakh. This is also not relevant. Will not do any subsequent measurement at fair value. On 1st October 2017, X Limited immediately began to convert a property into separate flat of equal size, which is intended to sell in OCB, ordinary course of business. Now it will be reclassified from IP to inventory at carrying amount, and carrying amount will be 2 crore only. So can you say as on 1st October 2017, the investment property will be reclassified to inventory at carrying amount, and carrying amount is what? 2 crore. Carrying amount is 2 crore. Yes, sir. Means what journal entry will do? Inventory account debit to investment property. X will spend a total of 60 lakh on the conversion project between 38 September 31st March. So this will be added. 60 lakh will be added. The project was incomplete at year end, and the directors of X Limited estimate that they need to spend further 40 lakh to complete the project. Means this is WIP, inventory, Ind AS 2. So WIP will be measured cost price NRV. NRV will be the NRV of finished goods minus estimated cost to complete. And each flat could be sold at 50 lakh. So there were 10 flats. So this becomes 5 crore. 5 crore. And 40 lakh is what? The cost to complete. So what is the NRV? NRV is equal to 4 crore 60 lakh. 4 crore 60 lakh. So what is the cost price? Cost price is 2 crore 60 lakh. NRV is equal to 4 crore 60 lakh, whichever is lower. So we'll measure this inventory at 2 crore 60 lakh as on 31st March 2018 and will be shown in the balance sheet as inventory. Low. Done. This is the answer. Okay, sir. Any doubt? 10. Okay. Then one more question is there. This question. In this question, only one doubt is there that I need to explain. What is the question? Korea Limited own a building A which is specifically used for the purpose of earning rental. The company has not been using building A or any facility for its own use for a long time. The company is also exploring the opportunity to sell the building. It is investment property. No doubt about that. Following information relevant for building A for the year ended 31st March 2020. Building A was purchased 5 years ago at a cost of 10 crore and building life is estimated to be 20 years. The company follows straight line method of depreciation. Here only one doubt will come. Doubt is what? The information has been given as on year end 31st March 2020. Means what is the doubt? Try to understand. If the information has been given as on 31st March 2020, Means year beginning is 1/4/2019, and they have given in the question, they have given in the question that the building was purchased 5 years ago at a cost of 10 crore and the life of building is 20 years. The company follows straight line method. My question to you are 20 year, sorry, 5 year will be counted from this or from this. Understood? 5 year building was purchased 5 years ago. So if you want to calculate 5 years ago from 1/4 is beginning of the current year or from the end of current year, here only the doubt comes. बोलो. I think those who are saying 1/4/2019, they have done this question previously. Because of that reason, they are saying 1/4/2019. I know. But those who are saying 31st March 2020, it means your English is not good. And when our English is not good, try to understand exam difficulty will arise. And just try to understand we are not an English student. But they check us in exam, they also check our English. Sorry, why you are checking our English? You should not check our English. Just try to understand. Following information is relevant for the year ending. This is for the year ending, means they are saying for the year 1920. They have never said the following information is as on 31st March 2020. If they will say following information is as on 31st March 2020, then you are correct. The 5 years should be counted from 31st March 2020. But they have given following information relevant for the year 1920. If I am saying for the year 1920, it is from the beginning of the year, and it will be from the beginning of the year only, and here only. If you have done this mistake, then entire solution will be wrong. So this is 5 year, and the cost price was how much? Cost price was how much? 10 crore. Useful life was how much? 20 year. It means what is the accumulated depreciation? 10 into 5 divided by 20 means the accumulated depreciation is 2.5 and the carrying amount is 7.5, and depreciation of this year will be 0.5. Understood this point? चलेगा? Have you understood this point or not? Okay, sir. Yes, sir. However, the same question was asked in exam. Trust me, in the exam they changed the information. They have given that building was purchased 5 years ago. From which they have changed the sentence in such a way that now it become easy to understand. The same question was asked in exam. IC also understood this is a point of what confusion. They have changed the question from a student point of view. So IC is good now. They are thinking for your betterment. Understood? Yes, sir. Then during the year, company has invested in another building, building B, for the purpose to hold it for capital appreciation. This is also investment property. The property was purchased on 1st April 2019 at cost of 2 crore. So it was purchased at the beginning of the current year only. So it was purchased at 2 crore. Okay. Expected life of the building is 40 years. As usual, the company follow straight line method for depreciation. So now it is 40 years. So divide by 40. So 2 divided by 40 is equal to 0.05. Okay, sir. Further, during the year 1920, the company earned or incurred following direct operating expenditure relating to building A and building B. You can see 75 lakh and 25 lakh is rental income. And then they are given these are the operating expense to generate this rental income. The company does not have any restriction and contractual obligation against building. Means from this to this now, they have given information about disclosure requirement. Disclosure requirement. Just try to understand. Can you see if this all para is not given, we can't disclose. Means if they want disclosure requirement, they need to inform everything in the question, then only we can disclose. So disclosure requirement means we want information, then only we can disclose. So whenever this type of information is given, we should disclose point by point. Point by point means what? The company does not have any restriction and contractual obligation against building and building. This is the first disclosure. For complying with the requirement of Ind AS, the management sought an independent report for the specialist so as to assess the fair value of building. So fair value has been measured by independent valuer. The independent value was valued at fair value of property as per the valuation model recommended by International Valuation Standard Committee. So this also you disclose. Fair value has been computed by the method known as what? Discounted cash flow method. So you know the techniques of valuation. The other key input, this is the assumption given. You need to write down assumption for fair value measurement. Assume the fair value of the property they have given 10.50. This is only for disclosure purpose. So this entire para is for disclosure purpose. If this is not given, we can't disclose. Chalega. What will be the treatment of building and building in balance sheet and SOPL? SOPL is not given, then also will disclose. Now the point is that how you are writing in exam. Normally in exam, students don't write the format extract. So first you need to prepare the extract of balance sheet, write on investment property, and investment property will come at 8.95. Then you should write on gross book value. Opening balance was 10 crore. Then purchase during the year 2 crore. So closing balance of gross book value is 12 crore. Then accumulated depreciation. This is accumulated depreciation. Opening balance was 2.5. You can see this was 2.5. Then current year depreciation will be 0.55. Current year depreciation will be 0.55. Understood? You can see 0.55. This is the closing balance of accumulated depreciation. This minus this will be 8.95. This will come in the balance sheet. This will come in the balance sheet. If you are not drawing in this way, they are not going to give you marks. Then you need to also prepare extract of balance sheet. They have not drawn the extract of balance sheet, but you should draw. Then you should also write on extract of SOPL. Rental income from investment property will be this. Then all the operating expense will be deducted, and then depreciation will be also deducted. This is the profit from earning from investment property before indirect expenses. Means this will go to other income. This will be shown under other income. Understood? Then other disclosure you can read one by one. You can give this type of other disclosure. Super easy question. 10 marks question was asked in exam. Chalega? Okay, sir. Yes, sir. Correct. Now write down some questions to be done by you. Only one question you will do by your own. Question 13 you do, must do, and question 14 super expected. This also you do by your own. Now you can do it. Correct. However, this is a question of analyze. Analyze means it is a question I have taken from analysis of financial statement. There is one chapter. Whenever there is a question of analyze, then what word you should write down? Whenever there is a question of analyze, you should first write down relevant Ind AS. Relevant Ind AS. Then definition and recognition criteria, then initial and subsequent measurement, then wrong accounting treatment, given in the question, then correct accounting treatment required, then extract of financial statement supported by working note, with working note. This much is required. Understood? So of course writing part you can understand with the solution only. Just try to understand. Don't think only about calculation. Think about what the writing part. Okay, sir. Understood. Do this question by your own and write down also how you write down. First read the solution, then write down in your own word. Can you write down this much in your own word? Not this much, exactly not the same. But you can write down, I will say whatever heading I have given. If that much you can write down, if this question is of 8 marks, you will get 8 out of 8. Chalega. Do it by your own. With this, India's 40 is completed from my side. Any question you are supposed to say about this chapter which I am supposed to do? Bolo. We'll take a small break. After break, we'll do India's 23. We'll take a small break. After break, we'll take India's 23. Chalega? Yes, sir. Yes, sir. Hello. Yes. Hello. 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 Now, everyone, can we start once again, everyone? Now, India's 23 borrowing cost. I will say once again, super simple, important, and totally based on calculation. And nowadays, what I have understood is to I see if they ask you a question based on this, that will be a conceptual question. Because they are not asking the question whatever they used to ask in CA Inter. So once again, borrowing cost. When I say borrowing cost, the borrowing cost are interest or any other cost in connection with the borrowing of fund. So this borrowing can be long-term borrowing, it can be short-term borrowing of any nature. However, this will not include any cost of equity. So this chapter does not include the cost of equity. However, if the preference share capital has been classified as financial liability, so preference share capital can be liability, then the cost of preference share capital will be a borrowing cost. Means any preference dividend which is for preference share capital which has been classified liability will be covered under this chapter. So when I say borrowing, so preference share capital be what? थोड़ा सा clear about that. So what actually India's 23 want to say, try to understand this point. If the preference share capital has been classified as equity, example irredeemable preference share capital, then preference dividend is not a borrowing cost. However, if preference share capital has been classified as equity, classified as liability, for example redeemable preference share capital, then preference dividend calculated by applying EIR. So always interest and dividend expense calculated by applying EIR as per Ind AS 109. That will be considered a borrowing cost. So this actually is a part of which chapter? Financial instrument chapter. So if you have done financial instrument chapter, then so you are able to understand whatever I am saying. If you have not done financial instrument chapter, then you will not be able to understand whatever I have said. So right now, if you have not done, ignore it. But this is a very special point which can be important for what? MCQ type of questions. Okay, sir? Yes, sir. So one thing you understood that any interest cost or any other cost in connection of borrowing fund will be borrowing cost. So it include what? Include interest expense calculated by using effective interest method as per Ind AS 109. Now, as per Ind AS 109, interest will not be calculated by contractual rate of interest. Interest will be calculated by effective interest method. Now, effective interest method means we need to calculate effective rate of interest to calculate interest expense. Understood? And interest expense in respect of ROU asset held by lessee as per Ind AS 116. So, of course, whenever any ROU asset held by lessee, so in that case, there will be a liability in the books of lessee. So, on that lease liability, also we calculate interest expense, but that will be discussed under Ind AS 116. Will not discuss this part. Will not discuss this part. It will also include any exchange difference arising from foreign currency borrowing. We suppose we have taken a loan from foreign bank, it will be in foreign currency. So whenever there is a foreign borrowing, yeah, foreign currency borrowing, so there will be exchange difference. So what India 23 says that exchange difference can be also regarded as an adjustment to interest cost. So how much exchange difference will be considered as borrowing cost, that will be discussed, but that will discuss at the end. Means right now we'll concentrate only on point number A. Point number B will be discussed under India's 116, and point number C will be discussed at the end of the chapter. Chalega. Now, only I just want to ask you one question, that anyone who don't know effective interest method, if you don't know effective interest method, means till now you have not done FR. You are doing FR for the first time. So just can you respond fast? Do you know about effective interest method? Bolo yes or no? As per India's 109. Otherwise, I need to explain that also, na? Effective interest method. Ba, everyone is saying yes. चमत्कार, चमत्कार को नमस्कार. Super. I love you. Arey, one person is saying no. Oh my God. So effective interest method. Actually, I said this. Actually, this entire batch is only for those students who have done their FI study in some previous classes. Means if you are doing for the first time, so there will be some difficulty. There will be some difficulty because I don't want to go to effective interest method right now because that will take 1 hour. So I just don't want to go. Acha sir, please give me small explanation, please. So only for you, because you are saying please. Whenever someone say please, na, so I become emotionally, means that time I become emotions, because as a mentor I can't avoid you. Correct. So for you, I have taken one example. Try to understand very fast. For example, on 1/4/2023, X Limited issued 10% debenture of rupees 1 lakh at a discount of 10%, which are redeemable after 3 years at a premium of 20%. It means if it is issued at discount, so what is the discount? Discount amount is how much? 10,000. Correct. And it is redeemable at premium. So premium is what? 20,000. Premium is 20,000. Underwriting commission was paid at a rate of 2% of issue price. 2% issue price. So 2% of 90,000, because 90,000 issue price, so that will become 1800. 1800. So can you say this is a discount on issue of debenture, this is premium payable on redemption debenture, and this is what? Underwriting commission. As per AS 16, accounting standard 16, AS 16, Bachpan, your CA inter level. AS 16 used to say that borrowing costs include interest costs as well as amortization of discount, amortization premium payable redemption, amortization of any ancillary cost, means underwriting commission, whatever. So this was also a part of borrowing cost under AS 16. Means as per AS 16, if you say AS 16, so can you say interest expense will come 10,000, 10,000, 10,000 for every year? Because as per AS 16, will apply contractual rate of interest 10% on nominal value. 10% on nominal value. Are you getting what I am saying? So as per AS 16, will apply contractual rate of interest on nominal value. So that will be what? 10,000, 10,000, 10,000. Correct. And there will be other costs. What is the total other cost? It is how much? 30,000 plus 1,800. 31,800. So this become 31,800. This become 30,000. The total borrowing cost for the 3 year is 61,800. 61,800. Understood? Are you getting what I am saying? Correct. And AS16 has said this will be this other cost, which they have not given any amortization rule. So AS16 or entire accounting standard was silent about amortization rule. They wish to amortize as per our choice, and wish to amortize in 3 years equally. Now what our Ind AS 109 says that don't at all worry, the total borrowing cost remains same only, but this 61,800 will be amortized by applying effective rate of interest. By applying effective rate of interest, means we need to calculate one effective rate of interest, so that this 61,800 is amortized in year 1, year 2, year 3 on some effective basis. On some effective basis. So as per AS, there was no effective amortization given. As per India, they have given some effective amortization, but this is the only difference. Difference you understood? Difference you understood means as per Ind AS 109, what will do? Just try to understand what Ind AS 109 want to say. What was the nominal value? 1 lakh. How much discount? 10,000. What is the proceed? 90,000. How much underwriting commission you paid? 1,800. So what is the original amount you received? Means how much proceed you received? 88,200. You receive 88,200. And what is the contractual cash outflow? 10,000, 10,000, 10,000, and 1,20,000 redeemable at a premium. Means total inflow was 88,200. Total outflow was 1,50,000. So what is the difference? Difference 61,800. This will be amortized in 3 years on some effective basis, and we need to calculate EIR. We need to calculate effective rate of interest. And effective rate of interest will be rate of interest at which, try to understand, effective rate of interest will be rate of interest at which the present value of this contractual cash outflow will be equal to this. See, if you know IRR concept as per AFM or AFM, whatever you have done in CNT, you can calculate effective rate of interest. So in my regular class, we calculated it at 21.17. So we use our IRR method. The rate of interest at which the present value of contractual cash outflow will be equal to the net proceed, and that will come 21.17. This become effective rate of interest. And when you apply this effective rate of interest, you can see your interest expense will come this amount. This you can calculate by your own, and you can see the total is 61,800. Means this 61,800 is amortized in 3 years by applying effective interest method. So this become interest expense. Means the total interest expense, total borrowing cost under AS 16 and Ind AS remain same, but the amortization change. There was no amortization rule under AS. There is some amortization rule under Ind AS. This is the difference. Difference you understood? Respond fast. Respond fast. Yes or no? Detailed discussion 1 second will be done under Ind AS when you run right. No. I will not go beyond this. This explanation I have given only for those students who said please explain, please explain. Miss, I have explained. Now just say me, have you understood or not? I think Tora to you have understood because you are at CA final. Okay, understood? Means I can explain anything. Okay, only the time is required for better explanation. So I think you have understood this much. Okay, very good, excellent. So it means, can I say, when I say borrowing cost include interest expense calculated by using effective interest method, that is as per Ind AS 109. This calculation of interest is as per Ind AS 109. Means Ind AS 23 has not given any calculation requirement. We calculate borrowing cost, we calculate interest expense as per the requirement of Ind AS 109. So borrowing cost Ind AS 23 only says what will be the accounting treatment. Means Ind AS 23 is for accounting treatment. Ind AS 109 is for calculation. So we are doing calculation of interest as per which Ind AS? Ind AS 109. We are doing accounting treatment of interest as per which Ind AS? Ind AS 23. Means borrowing cost only says, means Ind AS 23 only says that borrowing cost will be either capitalized or charged to PL. So when to capitalize, when to charge. But calculation is not done as per Ind AS 23. Understood? Understood this point? Correct. Now accounting treatment, either capitalize or charge to PL. So when to capitalize? Now once you understood when to capitalize, so you automatically understood when to charge to PL account as an expense. So what Ind AS 23 says that any borrowing costs which are directly attributable, to the construction, acquisition or production of a qualifying asset will be capitalized. So any borrowing costs which are directly attributable to the construction, acquisition, production of a qualifying asset, that will be capitalized. Otherwise, borrowing costs will be charged to PL account as an expense. Means first you need to identify whether there is any qualifying asset. If there is a qualifying asset, then only borrowing costs will be charged to PL account. If there is a qualifying asset, then only borrowing costs can be capitalized. If there is no qualifying asset, borrowing costs will be charged to PL account as an expense. Means now we need to understand what is qualifying asset. The qualifying asset are those assets which take substantial period of time for getting ready for its intended use or sale. Which takes substantial period of time for getting ready for its intended use or sale. Means either you will use it, either the asset is used, means property, plant and equipment, investment property or intangible asset will be used, inventory will be sold. So either you will use it or sell it. Understood? Means can I say inventory can be also a qualifying asset. From this we understood inventory can be also a qualifying asset. Okay. So any asset which takes substantial period of time for getting ready for its intended use or sale will be a qualifying asset. Sir, what is the meaning of substantial period of time? What is the meaning of substantial period of time? So you only answer if any asset take more than 12 months. If any asset take more than 12 months for getting ready for its intended use, it is a qualifying asset, it is not a qualifying asset. You only say. Qualifying asset. Okay. Now, if any say asset take less than 12 months, it is a qualifying asset, not a qualifying asset. If any asset take less than 12 months, it is a qualifying asset, not a qualifying asset. Respond. Those students who are saying not a qualifying asset, that is wrong. That is as per AS 16. However, AS 16 also has not given that explanation. In AS 23 is totally silent about the explanation of substantial period of time. So as per India 16, we need to apply judgment on this. Means actually whatever I'm asking, that is I am asking as per AS 16. So India 23 is totally silent about substantial period of time. Means can I say whether it is substantial or not substantial depends upon the management judgment. Now for this judgment we can apply AS 16. So AS 16 said if it is more than 12 months, it will be always a qualifying asset. But if it is less than 12 months, it may or may not be a qualifying asset. Means it depends upon judgment. So whenever you are saying it is less than, sub if the time taken is less than 12 months, so if you are saying not a qualifying asset, this is 100% wrong. For example, if suppose you are constructing a building and building has taken 12 months for the, sorry, 9 months for the construction, so whether it is a qualifying, of course it is a qualifying asset. Why it is not a qualifying asset? So what AS16 says, AS16 CA Inter says that if it is taking less than 12 months, we need to apply judgment based on the facts and circumstances of each case. Correct? But Ind AS 23 is totally silent about the explanation of this. We need to apply judgment. From examination point of view, if any asset is constructed, from examination point of view, if any asset is constructed, so we always assume it is a qualifying asset. But if any asset is acquired and it takes some time for installation, correct now, then we can assume if nothing is given, we can assume it is not a qualifying asset. Got this point? Then also it depends upon 100% assumption. So what I just want to say, from examination point of what you'll do, from examination point of view, try to understand. If it is a question of Ind AS 23, correct? It is a question of Ind AS 23. Taking more than 12 months, it is a qualifying asset. Less than 12 months, construction, always assume qualifying asset. If it is purchased and nothing is mentioned, then assume not a qualifying asset. However, alternative answer can be also given. But if it is a question of Ind AS 16, Ind AS 38, Ind AS 40, means when I am saying Ind AS 23, it means it is only for borrowing cost. When I am saying Ind AS 16, Ind AS 38, Ind AS 40, then it is a calculation of cost price. In that case, I will say if the question is silent, take assumption. and write down proper note. But from my point of view, just try to understand nowadays whatever question they are asking, that they are writing, it is substantial or not substantial. Means past year question, means I will say 5 year attempt before, there was a lot of confusion in exam. So fighting hua, you are not making the question paper as per student point of view. So now student is also what very much clear that will write down everything in the question paper only. But whenever doubt, not take assumption. Take assumption. Okay, sir. चलेगा. Okay, if less than 12 months but ready to use is a qualifying asset. Yes, yes. Any now try to understand what I am saying. Now with this, why they have given substantial period of time in the definition? Because they want to exclude two type of asset from a definition of qualifying asset. One is any asset which are initially measured at fair value. Any asset which are initially measured fair value is outside the scope of this chapter. For example, the best example is biological asset, because biological asset is initially and subsequently measured at fair value. At fair value. So the qualifying assets that are measured initially at fair value are outside the scope of this chapter. For example, biological asset. And any inventory that are manufactured or otherwise produced, any inventory that are manufactured or otherwise produced in large quantity on a repetitive basis will not be a qualifying asset, even though it takes substantial period of time to get ready for the sale. So there is one exception for the inventory. Inventory that are manufactured in large quantity on a repetitive basis will not be a qualifying asset, even though if it takes substantial period of time. So these two type of asset are excluded from a definition of qualifying asset. Understood? Correct? Any doubt about this? Please, if you have doubt, write down your full doubt. If you are writing 12-month question mark, I will not be able to understand your doubt. If you have doubt, write down full doubt. Okay, you have that much time that you can write down your doubt. Okay, sir. Because if I will not able to understand your doubt, I will not respond. Have you understood this point? Correct. Let me ask you one question. If you have understood, if you have understood, can you say property, plant and equipment for which you have opted revaluation model means it is measured at fair value in days 23 applicable, not applicable. And like what if it 12 months it is, I will say, a judgment. More than 12 months, less than 12 months, it is judgment. Exactly 12 months, of course it will be a qualifying asset. Okay, try to understand, it is only a judgmental factor. I am saying less than 12 months can be also a qualifying asset. If it is 12 months, that can be also qualifying asset. Are you getting what I am saying? 12 months from examination point of view, it will be always a qualifying asset. Got this point? Yes, sir. Now, those who are saying not applicable means they have not understood my one point. Those who are saying not applicable, they have not understood my one point. I said initially measured fair value. So PP is initially always measured at cost price only. Even though you have opted revaluation model, that is for subsequent recognition. I said any asset which is initially measured fair value. So biological asset is initially measured fair value, therefore they are not a qualifying asset. Understood? But if it is initially measured cost price, then Ind AS 23 will be applicable. Understood? The doubt is over. Doubt is over. These 2 points have you understood? Not now. चलेगा. Correct? Ships building company. Ship building company. The constructing a ship. It is a qualifying asset because it will take substantial period of time now. Acha, inventory, if you have doubt, let me explain clearly. Understood your doubt? I was not supposed to take that because that is not so much important from examination point of view. Let me explain that. Now, whenever there is an inventory, try to understand. Whenever there is inventory, lot of doubt for inventory, but ICA is not asking any question inventory. Therefore, I was actually trying to exclude this. Whenever there is inventory, if it is purchase, you can say purchase will be raw material or stock in trade, and that is, can I say, available for use at a time when it was acquired. Therefore, it will not a qualifying asset. So any purchase inventory will never be a qualifying asset. But if it is manufactured or otherwise produced, so there can be two points. If it is produced in large quantity or small quantity means one by one or in a very small quantity. It is always an expensive item. For example, the student asked me write down a shipbuilding company, so they will manufacture or conceive one by one aeroplane, expensive item. So that is always manufactured one by one. Correct now. So small quantity, correct. It is always customized. Means normally whenever we suppose if I am constructing a machinery for a customer, that will be always customized. Customer specification. Okay, sir. So it will be, it may or may not be a qualifying asset depending upon the substantial period of time. But large quantity, now there can be two issues. Either it is a routine process of the company to manufacture. Routine process means suppose I am doing production of a calculator, so after every 3 months I will start my production even though I have no order from the customer. But sometimes we produce only as per the order. I receive the order, I will do manufacturing. Okay, sir. Means that is totally based on order. So if it is on order, it may or may not be a qualifying asset. But if it is routine process, then it will be not a qualifying asset even though it takes substantial period of time. Means what they want to say, any inventory which is manufactured or produced in large quantity on a repetitive basis will not be a qualifying asset even though it takes substantial period of time. Understood? Means this can be what, a qualifying asset depending upon substantial period of time. Now you understood? Now you understood? Now whatever doubt, I think clear. Respond fast yes, then I will move. Time is also over. Trust me, whatever I am teaching now, my God, I was not expected to teach this, but you forced me to teach. Now I am thinking that I am teaching in regular batch. So if you are committed, disciplined every time you are coming in this 3 hour, in 2.5 hours, believe me, I will make you champion. Means I will give you that concept which you will not get in any regular class also. That is my commitment. When I teach now, I teach, means I actually can't teach without concept. Understood now? But you need to be committed. If you are committed, means trust me, this is my words, you will become expert in India. When I say expert in this, I am not saying about pass or fail. Pass or fail depends upon your practice. Whether you'll get good marks, whether you will not get good marks, that depends upon your self practice. Abhi I am teaching, you are coming in the class, but you are not doing self practice, you will not be able to score good marks. But I'll make you expert in India. Expert in India means you can compete with anyone as per the concept is concerned. Exam is totally based on practice, how you are writing, how you are writing in 3 hours. The exam is totally based on your writing practice, and for that self practice is must. Once again, I think today this much only because I can't go beyond this. Okay, chalega. So I think you have understood this point. One more point, that too you have understood that any asset that are ready for its intended use or sale when it is acquired is not a qualifying asset. So India's 23 is totally pending from my side. Only we have done the definition, and when borrowing cost will be capitalized. Now you have understood that also. I hope you have understood whatever we have done today. Once again, I will just close my class with 3 words, that if you want to benefit from this match, you require discipline, consistency, and commitment. If you don't have these three thing in your life, the probability to become CA is very less. Means when I was doing CA, trust me, everyone who do CA will be determined, will be disciplined, and will be committed. Without that, CA is not possible. An average student can become CA, but if you are intelligent, you may or may not become CA. Correct? You need to sit down and study. Sit down for how many hours? Trust me, just try to understand one point. If you know any cricketer, you know Virat Kohli, you know Sachin Tendulkar, they have not become the legend by watching videos. They have not become legend by watching some cricketer in YouTube videos. They have practiced for 16 to 20 hours. I know the time when the Virat Kohli was underperforming. He came back and he proved to the entire world that he is capable of doing what. But at the time when he was not performing, he started practicing for 16 hours a day. Correct. If you know any athlete, they will perform for 16 hours every day. And you want to become CA, you can't study for 12 hours. It is, I am saying, this is totally unacceptable. You need to sit and study because you have decided to learn only. When you say I want to become CA, you have only one role, to study. If you say I want to become I want to become singer, then practice singing for 16 hours. If you want to become swimmer, then to practice swimming for 16, not 16, 12 hours to must na. Correct. If you want to become CA, you need to practice for how many hours? You need to practice studying for 12 hours. And if you say no, sir, I'm not feeling this is boring. So why you are here? If it is boring, why you are here? Ask any successful person. They are working for 12 to 14 hours for themselves. Trust me, you will become CA if you study for 12 hours. 12 hours is must. Anyone, if there is someone who is saying 4 hours, 6 hours, because 3 hours, 3 months is left. The last 3 months, 12 hours is must. If someone is saying now you study for 4 hours, 5 hours consistent, okay, just try to understand. They don't want you to become CA. Trust me, if someone is saying that you will become CA in you study for 4 hours, you will become CA. Trust me, they don't want you to become CA. Don't listen to them. When I was doing CA, trust me, I used to study for 15 hours a day. That is the fact. Last 3 months, I was locked in a room. Locked in a room. No discussion. Even I don't used to talk to my parents also. If you will not become CA, your parents will say one day, why? What happened? Where are you? Why you are wasting your time? That you need to understand. Sit and study. You have only one job. Forget about everything. Okay, with this word, I want you to be committed. Once again, commitment is required. Come, if you are not committed, nothing can help you. Bye bye. Love you all. Meet you in the next class. Okay, and do like the video. Okay, bye bye. Love you all.